Top gold price drivers. Government budget imbalances, fiscal dominance, and interest rates may cause hyperinflation. The mechanics are simple yet alarming. Governments, in their quest to stimulate economic growth, often resort to printing more money. If they can't borrow more money, they run massive deficits. This action invariably leads to devaluation of the currencies and potentially hyperinflation. This is where gold comes into play. Here are 3 strategic reasons why gold becomes a solid investment option in such a scenario. Hedge against hyperinflation. As the value of the currency diminishes, the value of gold tends to rise, preserving the purchasing power of your investment. Store of value. In times of economic instability, gold serves as a store of value. Unlike paper fiat, central banks cannot print more gold. It retains its value as paper fiat currencies backed by faith diminish in value. Fiscal dominance. There is a tipping point where monetary dominance shifts to fiscal dominance. Federal Reserve can, to a certain degree, squash the demand side of inflation, but the supply side that is presently being driven by massive government spending and deficits is largely out of their control. When the Federal Reserve is forced to pivot and stop its monetary tightening and resume quantitative easing, that is where inflation has the potential for resurgence at a more extreme, possibly violent rate. The Federal Reserve will have no choice but to step in and monetize the debt in order to prevent a sovereign debt crisis. Also, with the debt to GDP ratio presently over 120%, the ability for the US economy to grow its way out of its debt becomes more and more challenging. Just a quick interruption to this week's episode to give a quick mention to one of this channel's sponsors, Augusta Precious Metals. With over a decade in the industry, Augusta Precious Metals is one of the leading gold investing companies for trust, customer empowerment, and prices. The company provides 401k rollover services to tax-advantaged gold IRAs, as well as a unique gold investing educational webinar and resources for their customers, helping beginning and experienced investors protect their retirement wealth with confidence. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free. To find out more about Augusta Precious Metals, see the link in the video description to visit Augusta Precious Metals' official site to receive a free gold investing guide. Also, check out our video review of Augusta Precious Metals by clicking the link in the top right. Now back to the episode. An overly levered, indebted system. Central banks around the world can only paper over these problems for so long. Eventually, the government and institutional band-aids can no longer hold back the blood flow of what is really a systematic, gaping wound. Arguably, this may be one of the reasons why central banks around the world are increasing their collective holdings of hard assets, such as gold, onto their balance sheets, as opposed to US dollar reserves. One word: preparation. Gold is a Tier 1 asset that has no counterparty risk, is no one's liability, and has only increased in value during a time that can best be described as a 40-year-plus debt cycle. Not coincidentally, this period aligns with the rise of widespread non-asset-backed fiat currencies that accelerated in growth after the abandonment of the gold standard in 1971 by the United States. During this cycle, the ability to increase the global debt without the need to increase the gold supply made way for an extremely leveraged system. Gold has served as a universal safe haven asset and store of value for thousands of years. The US dollar, the cleanest shirt in the fiat laundry basket, will likely serve as an initial safe haven due to perception formed by many years of conditioning. Eventually, the strongest fiat lifeboat, the dollar, will reveal its numerous holes. One can surmise from viewing these recent economic trends that we are seeing the beginnings of an end of a failing 50-year faith-based fiat experiment. It is worth noting this period is the exception, not the rule, of humans' history of commerce, although many living do not know any different. With the further revelation of these economic fault lines, we may be seeing a reversion back to the historical mean of the necessity for sound money backed by actual, tangible hard assets, not faith and trust. Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business need to ask themselves? Are we growing wealth or are we losing wealth? And how do we measure this? Gold is that tool. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring that all these investment principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the links in the video description to access the free gold investment guides from these companies. If you have $100K of retirement savings to protect and want to take advantage of the best volume prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.